Amazon is a $1.9 trillion company, and yet I keep on buying more and more shares despite it being the number 2 position in my portfolio. Why is that? Am I crazy? Am I crazy to add more shares to my second largest position despite it already being a company worth $1.9 trillion? A company that is up 20% year to date, a company that is up 95% in the last 5 years, or basically double in the last year and a half. Right now, one share will cost you $182. Now, why exactly am I so confident in Amazon, despite it, in my opinion, being one of the best companies on this planet, and will be staying like this for years and years to come? It's not only because the analyst expectation sales growth about the same 11% year over year for the coming fiscal years, but the profitability side of the business is becoming better and better and better. And so if we look at Amazon stock, compare it to its 5-year performance with regards to forward PE, EV to EBITDA, price to sales, price to free cash flow, price earnings to growth. Amazon today is much, much cheaper on a forward PE and EV to EBITDA. If you look at price to sales, it's actually exactly the same, 2.9 times compared to 2.9 times. Price to free cash flow, that's a last 12 months metric, 41.5 times compared to 100.6 times. Of course, there was a large period here where there was basically no free cash flow. But despite all of that, despite this company being close to a $2 trillion company, it is now cheaper than before. Even if we do, let's say, 10 year, you're buying Amazon today at cheaper valuation than it's been in the last 10 years. It's that obvious. I mean, to me, it's that obvious at least. Maybe I might be wrong. Let me know down in the comment section below. Even if we look at price earnings to growth, right? We're not basing our decision here purely on what happens today or what happened in the last 12 months, on the last 3 years. No, let's see what might happen in the future. What are the expectations? Price earnings to growth, 1.62 compared to 4.32. That's in the last 10 years. In the last 5 years, 2.76. Still, the point here I will be making throughout this video is that despite it being $1.9 trillion company, you can still find some bargains. Of course, like I said, it's my second largest position in the portfolio. I'm obviously biased, but I think most of my viewers use an Amazon service. Most of my viewers agree that this is an incredible company, and maybe a lot of you are Amazon shareholders as well. So do share your thoughts down in the comment section below. Before continuing, thank you very much for all the support. I think we're over 42,000 subscribers right now. So the road to 50K this year is definitely in sight. If you're new here, hit the thumbs up button, subscribe, notification bell, do all of that. Thank you very much. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Let's start off with Amazon Prime. I made a lot of videos about Amazon on this channel, about the Prime membership, about the third-party seller, about AWS, the advertising site. All of that can be seen on the channel. So Amazon Prime is one of the most popular subscription services in the world with over 230 million members worldwide. It offers a variety of benefits, including free 2-day shipping, 1-day shipping as well, streaming video and music, and exclusive discounts. A typical Prime member spends on average $1,400 annually on Amazon. This is significantly more than a non-Prime member who spends an average of $600 annually. So you can understand why Prime for Amazon is extremely lucrative, especially if they can convert you to a Prime member. Now, the number of Amazon Prime members in the United States is predicted to reach 171.8 million in 2024. Amazon generated $40.2 billion in revenue through Prime membership in 2023. Amazon Prime holds 53.1% of paid retail membership fee revenue in the United States as of 2023. Amazon Prime member purchased 375 million products during Amazon Prime Day in 2023. I mean, you can start to understand why Amazon Prime is, in my opinion, the kings of kings when it comes to a subscription. The price you're paying plus the value that you're getting, in my opinion, is second to none. Then moving to another part of the business that, in my opinion, is still early days despite it being already extremely big, and that's the AWS side of the business. Now, more recently, there has been a change there. So Adam, previous CEO, is stepping down, being changed, replaced by Matt. Now, what's interesting here is that Matt started at Amazon as an MBA intern during the summer of 2005 and joined the company full-time in 2006 as one of the first AWS product managers. So it's safe to say that he knows AWS inside out. And it's true that AWS, despite it being still the number one, it was a bit behind when it came to everything AI. So that change, in my opinion, is a good one. If we look at AWS as a business, net sales last quarter was up 17% year over year, operating income up 84% year over year. It is now on a $100 billion annual revenue run rate and still growing. So again, a tremendous business, great margins on that. If we look at Amazon's overall net income, that was up 229% year over year to $10.4 billion. If we look at operating income, up 221% year over year, reaching $15.3 billion. Then, if you look at free cash flow, this is in the last 12 months, so trailing 12 months, free cash flow reached $50.14 billion. Operating cash flow, $99.14 billion. That was up, I think, 82% year over year. Do you understand how insane this is? This is a money printing machine. Previously, Amazon, there were periods where margins were negative, no free cash flow, losing money, or low margin, extremely low margin business because of the Amazon.com business. But do you see those numbers? $99.14 billion operating cash flow. This is incredible. And this is great because then they can invest more in their business. They can reward shareholders by buying back a ton of shares because, yes, throughout the years, we have been diluted by quite a lot. But in my opinion, this is day two for Amazon. Moving on to the next part I want to show you, and I've probably shown you this already countless times. So this is from their last earnings report. Net sales. So online stores up 7% year over year, physical stores up 6%. We don't get, this is a lot of revenue, but low margin businesses. If you look at third-party seller services, higher margin business, growing also faster. That's up 16% year over year. Advertising services up 24% year over year, reaching now $11.8 billion a quarter, and sometimes even more, making Amazon one of the biggest advertising players on this planet. I mean, if you cut Amazon's business in a couple of parts, it's worth already more than a lot of publicly traded companies. Subscription services up 11% year over year, AWS up 17%, so we got a clear reacceleration there. I mean, it's truly an amazing business, one of the best on the planet. And so despite the stock having a V-shaped type of recovery, right? Remember we talked about Amazon under $90 was truly a no-brainer. I wasn't the only one talking about that. Amazon, Google, Meta, all of those were extremely no-brainers under $100. Right now, Amazon completely recovered to where it was before, reaching actually new all-time highs at $190, $192 or so. RSI was overbought, but now we're sitting at the 50-day moving average. The 200-day one sits a bit lower, $162.9. So overall, in my opinion, if we drop a bit lower, okay, let's see if we can drop to 160, but I don't see that happening anytime soon unless next earnings report is a complete disaster. But so far, we are making a small type of basis at around $180. In my opinion, like I said from the start, Amazon right now, you're getting a tremendous business, more powerful business today than ever before for cheaper. So what's not to like here? Unless I'm missing something, which I don't think I am because I've been investing in Amazon since 2018. Love the business. I'm a subscriber. I use the services. I think, again, it's one of the best businesses out there. You can buy it for less today than ever before. It's more powerful today than ever before. It will continue to grow quite fast and dominate in a lot of segments that are growing fast and are becoming more and more profitable. My opinion, one of the best picks on the stock market. Of course, these are just my thoughts. Leave yours down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.